All right, hey traders, this is Christian from Tribeca Trade Group, and it is Friday, close of business on March 29th. And this is the end of day, end of week video, which I really enjoy doing these. I started doing these a couple months ago, and it's just really nice to kind of go over the whole week. You know, the week is over. Now I could say the month is over, the quarter is over. Really pleased that overall performance and everything like that. This week was a little bit hairy, but I always like to go over the takeaways from the week. Like, what did we learn, right? I mean, there's always things to learn and improvements to make as a trader. It's never, I say this a lot, but it's never one of those, you never get to the point where you're like, hey, I figured this out, and you become an awesome trader. It's always a work in progress, and it's a process. So if you didn't have a great week, or you didn't have a great month, or whatever it is, it's a lot of it is about reflection and learning and taking another step forward. Because a lot of it is education, to kind of get better and better at this, and yeah, so there's always things to learn. The human psychology is always one of the hardest things as well. You're always up against your own head, right? That's part of the battle as well. So that you can never, no matter how great a trader you are, you're always battling your own thoughts, your own head, your own rationale, whether or not you're thinking clearly or not. So I think that's a big thing, and it's really in my trading and over the years, really taking a step back once you get to the end of the month, especially end of quarter two. But I'll repeat this, and you probably have heard me say this before if you're a regular viewer of my videos, but I like to take the Bill Belichick approach, right? I'm a big Giants fan. Bill Belichick was the defensive coordinator of the Giants before he went to the Patriots. But anyway, without getting into what team I like, I really respect the approach that he uses as a coach. So you've probably heard me say this before, but one of the things that he's always asked in the beginning of the season is, hey, do you expect to go to the Super Bowl this year? And he's not the best person in interviews. I think if you know him at all, you probably have seen that. But he basically was like, he just won't give that answer. And he'll just say kind of the same thing. We'll take 1 week at a time. And I really think about that a lot in terms of trading. You take one trading month at a time. You forget about the whole year. And of course, it's good to do some planning for the whole year and set yourself up right. But you really want to make sure that you win one month at a time. Think about what you need to do to be profitable each month and win each month, right? And because using Bill Belichick's terminology, right? If they go ahead and they beat their opponent every week, their odds are they're going to make it to the playoffs, and if they do that in the playoffs, odds are they're going to make it to the Super Bowl. So they don't look that, they make sure that they win that game, that they prepare for that game, and they win it, and they don't look to the next opponent. So we got April next. You don't look to May or June. You make sure that you win April. And you really take a look at what you did. You reflect at what you did the previous month that was poor, and I'll share with you some things that I've done in the last month that probably could have been a little bit better. But that's how it works. And for me, I think I've had a profitable month every month. Here's just a quick snapshot of my P&L. Now this, I'll have the update for tomorrow because all my trading that I do is in E-Trade, and they don't update until the following day. But yeah, the first month, very strong out of the gate. February was okay. I think I hit like a bad day at the end of the month, so I think March may have been a little bit overinflated and February under. But right in here, right around 45% for the month. So this, I'm quite pleased with this. Again, I didn't go through the whole year or all of March or February without making mistakes. So there's always, like I said, room to improve. Do I expect this same performance for next quarter? Probably not, but I'll try my hardest to get it that way. I think the S&P, I saw the headline, finished up 13% for the year so far. So, of course, I do trade mostly on the long side. I will hedge myself when I think that we've got sustained volatility or even short-term volatility. And I will try to put on more short plays when I think if the market is going to break down, but I haven't really felt the need to do that all year long. So we'll continue to kind of work hard and work hard for my members of Tribeca Trade Group. I'll tell a quick story about last night, but I will share this officially for tomorrow for like I said, the P&L once it comes out, because like I said, it doesn't update till tomorrow. But again, pretty happy with that performance. So let's focus in and talk about today, and then we'll talk about the week. But yeah, I was supposed to go out last night to watch the March Madness games with one of my colleagues, one of my friends from a long time, and he had to cancel on me at the last minute. And I said, you know what, that's fine, because I really wanted to do the analysis that I normally do a couple days a week. Especially I like to do it on Thursday nights, because sometimes you could really find some nice trades for Friday that you can kind of use lottos if you like, or you could use next week's options, and we did that. My discovery was just going through the charts last night. I said, hey, I think we're really kind of due for a rally. Now, of course, I was looking what China was doing last night too, which was pretty, as I like to say, minty green. How they opened up last night and how they carried through their session when I was doing this around like 9:30. But I can't stress enough sorry, I can't stress enough. Sorry, somebody's sending me funny stuff on Twitter, but I can't stress enough, like, screening stocks, and you could do it relatively quickly. You could do that in FinViz, and I have a bunch of screeners that I use. Like, for example, I have all the software plays of my own index that I created, and I've got them all in here. But it kind of just lets you, as if you're watching a basketball game, you can multitask and you can kind of go through. But these were my software plays, and just happened to see a lot of names that look like they were starting to come out of consolidation. And just like the S&P, right? I mean, we've resolved ourselves. We never, again, this week I think was very choppy. You had to really stay, not get over the tips of your skis in a choppy market. At times it was frustrating because it looked like a couple days we were really going to rally hard, and we had that, I don't know what you want to call it, maybe some sell programs in the middle of the day, maybe some Brexit anxiety, which I want to talk a little bit about that. But if you stayed with it, you could see that if we zoom in here, we never fell into value. This was the only time where I remember back here on 3.8, everybody was thinking that we were going to move down into this, and we never broke value. So again, the value areas really helped me a lot, tremendously, and really just kind of seeing this a couple days where we try to break into value and held. So really nice move. And if you start to look at if you look at the weekly chart, I know this 2800 has been a battleground. Michael Santoli was just talking about that on CNBC. I really like the work that he does, by the way. He does really good analysis. But hey, we closed above value here, which is, this level is 2816 in S&P futures. We did one of these fake outs last week, which was kind of painful on last Friday. But look, this is a pretty clean bar above value, and it looks like for now we're headed in the right direction. We've made it all the way through value. Tremendous rally, right? That's a great adjective, I think, to use at this point. Qs look the same, so it's S&P. Qs are going to be above value. They did, again, a little bit of a fake out, but your support is 176.16, and if you go through the daily chart, it's going to look a little bit different. At this point, you can look at the April value area. That's complete. Looks like the Qs, which underperformed this week, are going to open up right in value. And again, that's going to look a little bit different than S&P. S&P is going to open up on the high side. So again, above value for weekly, but it looks like we're going to open up right around the top of value for the new month. So, whoops, we'll have to get, we'll see how that goes. Little decision here. Maybe we have an inside day on Monday, or we just keep going. Those are a couple things that I'm thinking about. IWM, of course, is going to look much different. That's also going to open up inside value, but below the point of control. This one actually, IWM actually underperformed a little bit today. Still positive, but underperformed. Weekly, again, the weekly bar is going to look a lot different. That's still stuck in value. So let's go to, and then also the last one, which I don't look at all the time, which is the diamonds. Diamonds also closed above value. But take a look at why the picture is interesting here on the daily is because similarly to the S&P, we're going to start the month right at the top of value. And if I can get Thinkorswim to work. But notice how slim the value area is. It's slimmer than the S&P. Again, remember what the value areas are. They are one standard deviation around the price action from March. But you could see it was very, very tight price action for the diamonds last month. Now, if they get above, this is almost the equivalent of like coiled with the moving averages. I mean, you could have a nice spring if we could get above here. And notice how this was an inside value area from the last month as well. So I'm watching the diamonds for next month. I didn't put a trade on. You could also see that they're almost going to fire off an MACD bullish crossover. So I think that is something to keep an eye on for next week. The performance, I like to do this as well every Friday. Notice I shaded this in green. This is last week's performance. I kept this here. So S&P outperformed the previous week. The diamonds outperformed. Notice that the small caps again, and this is the second time that they've done this in the last month. They managed to increase and outperform the S&P, which is good, right? So it's a baby step in the right direction. But they did not outperform the previous week's performance. And like I said, we saw this, I think 2 weeks ago it was, where I think IWM was down 4%. Or I should say maybe that was 4 weeks ago, where IWM was down about 4%. And then 3 weeks ago it was positive again, but it did not get over that 4% loss. So if you go to I think this will make more sense if we look at this. So it's so nice to see them outperform, right? The small caps. And I think here's what I'm talking about. We had a 4% down week, an inside week green, another engulfing, and then another smaller green. So this continues to be an area of concern. And if we go to our chart of SPY versus IWM, or IWM versus SPY, we'll look at this in terms of the small cap ETF in the numerator ratio chart. Here it is. You can see that we bounced off this low, right, that we made in December. So we'll keep an eye on this. It's, again, good to see this not break below here. But we'll definitely be keeping an eye on that for next week. Now, to talk a little bit more positively, because I think that's will remain a trouble spot. Emerging markets, they also didn't do better than the previous week. Either did EFA. TLT, of course, was up this week. And GLD, interesting, was down this week. But big performance the last 2 weeks was at 3.9% for the bonds. Bonds did what we thought they would, by the way. We talked about this a lot. They did finish. They did come back from the lows. I think at one point they were down about 0.5%. So we'll keep an eye on this too. Again, the way the version point of controls, which if you didn't see last night's video, I did a whole video about what version point of controls are. So if this gets back above, then it just shows that how strong the bonds are, and that can happen. I think that there's more odds that it will stay below this version point of control, but If there's, if there's something else going on, then this price action will get above that purple line. If not, it's probably, maybe people a little bit were too short bonds. Maybe the short interest was a little bit, and sorry, someone's just calling me. Um, it may be something more than like a little bit of a short squeeze if price gets above there. Something greater is going on. All right, so let me move on. Also just quickly, I like to look at the sector performance as well to see if it was risk on or risk off. Remember from the previous week, the only thing that really outperformed were the gold miners and energy. This week, more risk on. And this is where it gets a little bit more positive, right? So the small caps were definitely a area to be focused on, to kind of a danger area. We talked about them already. What was really positive this week was the transports and the regional banks. These were two of the other areas that really got beat up the previous couple weeks, and transports were up 3.6%. The banks were up 3.4%. So these are really good things to see them not break down. Again, my view on the banks for a while has been I don't think they need to outperform or rally hard for the S&P to make new highs, which I know a lot of people care about. Not so much me, because you can always trade other things than the S&P. But I don't want to see them break down. I think that would be a bad sign. So as long as they kind of chop around and do whatever, I think that's ultimately fine. The Chinese internets were up 5% this week. So that was another thing. That was what we traded today. I sent out that note to members this morning about watch the Chinese internets with China up overnight. By the way, I'm happy to kind of give these little tidbits away. But if you trade a lot of the Chinese internet names, you have to watch what China does overnight. It's a must. You can't really position yourself in BABA and JD and so on and so forth with the Chinese internets if China goes down overnight. They're very highly correlated. Even though the ADRs and the names the Chinese internets mostly trade here in the US, they're still going to follow what the Shanghai and the Hang Seng does overnight. So again, videos for information purposes only. I'm not giving out any recommendations or anything, but that's what I do. And I would not really, if the Shanghai and the Hang Seng are weak, I don't want any part of the Chinese internet names, such as BABA and so forth. But we nailed that one perfect today, and that's exactly what we put on the private Twitter this morning was... to watch names like, let's see if I can bring this up here without too much trouble. But these were our first tweets that I mentioned this morning. I typically like to play some lotto calls. So BABA, BZUN. So again, I sent this at about 8 o'clock this morning. I said to watch these names. So what did I play? I already own JD, so I did not do a lotto. There was some more call buying in this one. This thing looks great, by the way. So I'm really pleased with our swing trade that we've got on in JD. Really, the weekly chart was what I was looking at here. And notice how this is now trying to get into value. If you want to get involved now in JD, I would say use this 28.75 stop. And then if you look at BABA, which is what we played today, we played next week's calls. Notice that you've got a bullish engulfing candle on the weekly. And then if you go to the daily, it's just been hanging out for the last couple of weeks. It's been very, not weak, just hasn't had any momentum to it. So it looks like it's getting over this. I took my weekly calls that I had and started a longer swing. I don't really like to start positions on Friday, but it just kind of triggered. And look at the volume too, by the way, in BABA. So really nice. A couple other names that I was watching I did not participate in, but BZUN was another name. Up 6. Oh my goodness, I didn't even look at it. I had about 30 alerts set this morning, and they all went off at once, which is a little bit difficult when the market kind of gaps up a little bit. But that was a name that we also, damn. Let's see, which one did I have here? This was Baba. Momo was the other one that I was watching. Yeah, here's how BZUN looked this morning. Geez, that's a nice candle. Would have been nice to take a shot at that. What was the other one? I didn't play this one either. Momo did okay, so it looks like that was not that much of a. I think it finished right around where it opened. So lessons for this week, and I can go on and talk about more and more names, but I'll have these in the weekend newsletter. If you're not a member, you can go to TribecaTradeGroup.com and you can find you can email me. Where's the right page? But I'm going to go over a couple other thoughts for the week. As I mentioned, I'd like to go over some of the things that I did not do right this week. And probably over trading was one of them. So yeah, you could go to our products page. You can sign up for our elite trading package, which gets you into the trading room. If you're interested in a part-time membership, you can email me, cfromhertz@TribecaTradeGroup, and I'm happy to discuss that with you. That'll give you access to our Twitter feed for a little bit less. But yeah, so thoughts for this week, right? I mean, and I think this could be where we might be next week as well. Takeaways, I think you really just have to pick your spots. I think with this Brexit headlines, one thing to kind of think about is whenever there's these Brexit headlines, the market sells off, and then after the market realizes that it's no big deal, then it recovers. And we've seen that a few times over the last 2 weeks. It kind of reminds me of back when the Greece thing was going on, the Grexit, remember that? It was the same thing. Everybody talked about when the Greece was looking to leave, it was a market dip, and the market dip, everybody said, oh, shouldn't really affect us that much, and the market went up, as it should be, because really not a lot of individual companies are affected by the Brexit. Is it a different story for Europe itself? Absolutely. Right? I think Ken Griffin was on Bloomberg a couple of weeks ago, and he was talking about how it's uncertainty for them. It's really tough for companies to place investment in the UK right now because you don't know what it's going to look like. So that's a big hindrance right now for Europe. But for most companies in the US, it's not going to matter that much. So I think looking at this, maybe the 5-minute bar, really, I think being careful about where you're taking your trades, where you're starting your trades. Almost every day this week was a trap in the first hour, and a lot of the move, which we've talked about, is happening overnight. That's a big thing. So putting trades on at the end of the day versus putting them on in the beginning of the day, you're getting rewarded by putting them at the end of the day and taking them off in the beginning. Or you wait for the market to dip, and then you kind of attack a little bit. Did I make a mistake a couple times this week, probably putting a position on or two in the first couple hours? Sure. One thing to alleviate that is to scale into positions, right? So that I did that a couple times. I kind of learned later on in the week that this is how the market is moving, and I would put on I'd put on a starter position around the open, and then when we dipped around 10:30 to 11 o'clock, I put the other position. I did that in CSX yesterday. It's a good example. So having that frame of mind that it's a process, right? And going to pick spots and scale in, I think is definitely a takeaway for this week. Picking your spots and just not going in really large with any one entry. And then also just being patient and being picky. Just like with poker, you only want to play the best hands. So I think you really want to be picky and stingy right now. Also the market is a lot higher than it was a couple months ago, so valuations are a little bit higher. I know I'm not a big fundamental person. I don't look at like PEs and so forth. I'm more of a momentum and trend trader, but I don't want to be completely ignore these things because I know some traders will look at valuations, and as we go higher, right, people are going to take profits at certain points. So you have to be cognizant of that as well. The other thing that I know Jim Cramer has been all over about, Lyft went out today, and there's going to be more. There's going to be a lot more IPOs, and unfortunately, people have to sell. Funds have to sell to make room for the new investments. So you're going to get chances, but you have to get used to buying the weakness rather than buying strength, which sometimes I'm a victim of, because I like to wait for confirmation, which sometimes means that I'm buying on a green day. But really, you're getting traders this week. If you would have bought every dip this week, you would have banked huge money on the lows of the session. Now, of course, that's tough to figure out. That hindsight is 2020, right? A couple days we looked like we were going to break down. I thought anyway. So anyway, that's it. No crystal ball reading for next week. For this week, some of the things that I'm going over, they seem obvious after the fact, but they didn't during the week. So, just kind of hang in there and take it one day at a time, and be careful with your risk as well. With the way that this market is oscillating, having less positions on, I think, is better than having a whole bunch of positions, because during those dips, rather than look at the new opportunities, you're managing your existing portfolio and you're missing the new opportunities. I will say just one other quick sentence on option activity this week. I don't know, there wasn't anything really that great. The one thing that I did very well on was SVMK. That was a home run trade this week. So that completely was all option activity. But other trades, like I took Zen today. Yeah, there was a little bit of calls in Zen today, but I'm telling you, if you're solely dependent on option activity, you're really missing, because a lot of times when you see option activity, you have to chase into strength. How many times do you see option activity and a name's already up 2%? You're going to chase it up 2%. So if you do your homework, and that's what I try to do for traders, is do the homework, you can get into some of these positions, and then the option activity, like JD for example. I think we got into JD and there was really no option activity, and now everybody's playing momentum calls. Isn't it so much better to be in the position and then they start buying all these momentum calls? So anyway, I'll leave it there for the weekend. Have a great weekend, everybody, and see you back on Monday.